Friday Coffee with your mortgage man, Eric. So today we're going to talk about community property states. And what does that mean and how does it affect your FHA and or VA loans? And why? So first thing you got to know, yes, Arizona is a community property state. Coffee's good today. And there's only 9 states out of our 50 in the U.S. that are community property states. The majority of them are on the southwestern border: California, Arizona, Texas, Louisiana, New Mexico, and then I think there's one oddball, which is Michigan, up in the Midwest. That's it. The way that it applies, or the way that it interferes, I would say, on mortgage financing is when it comes into play with an FHA loan or a VA loan, which are government loans. And what that means is basically it is government quasi-insured by HUD. So it's the loan is insured somewhat by a government entity. And so is Fannie Mae and Freddie Mac, since the government somewhat owns them. But the topic for another discussion. Conventional loans doesn't apply. So USDA and conventional financing, these rules do not apply. It's only FHA and VA. And it's rather confusing, especially for people that bought homes back east, somewhere else, and they come to Arizona, and they get into FHA financing. And where it really starts to become confusing is when you have a spouse, one of the spouses doesn't want to be on the loan, or they can't be on the loan. Their credit scores are pretty poor, or they got some other type of things going on, and they don't want or can't be on the FHA or VA loan. So then what happens is, let's take an FHA loan, because that's where it happens the majority of times, right? This scenario. Where one of the spouses will get a little irritated and frustrated and confused. Example, the husband is the breadwinner. Let's say he has to be on the loan, and we say, well, look, we have to pull your wife's credit. Well, she's not going to be on the loan. Doesn't matter, Arizona, it's a community property state, and basically community property says whatever his is yours, whatever yours is his. Doesn't matter when it happened. It is what it is. So on paper, on the mortgage loan application and all the mortgage loan, home loan documents, whatever your spouse, who's not going to be on the loan, whatever debt that she has or he has, that the other spouse has to be included into the borrower that is on the loan, into their debt versus income ratios. Well, why is that? Well, because it's community property state. Look, I don't agree with this law. I think this law or rule or policy is bogus. Just because we're a community property state and 41 of the other states, they don't have to worry about this issue. So in my opinion, it hinders some financing options or availability for buyers getting in the homes. They marry somebody that has this debt. They didn't have it prior to marriage. It can affect your loan approval, and it's a pain in the rear. So let's say they had an old car loan, right? Or they have all this debt, collections, bad debt, that plays an effect. Now, we don't have to use their credit score. They're not on the loan. The spouse is not on the loan. We're not using their credit. Their credit score means nothing, but their debt means a lot. Their debt gets added to the main borrower's debts on paper, on the home loan, in their computer system file, if you will, and we have to qualify with that on paper. Okay, now follow me here. Well, what happens if it took place prior to marriage? Okay, That's where it starts to get sticky. Well, those debts, that car loan that took place 4 years ago, we just got married a year ago. Okay, now we got to get an attorney's opinion letter, and that's not fun, right? And that gets even more frustrating, and it just irritates the consumers. And as soon as they hear the word attorney, they just want to give up, right? But all the attorney's going to do is give their opinion. It says, yes, that debt by Susie was originated, prior to them getting married. Okay. Now, some lenders won't even allow that. Some lenders will allow you, though, to dig deeper into the weeds if the consumers, the borrowers, wish to dig deeper into the weeds and get an attorney that will spell that out for the lender and their underwriters. Okay. Highly frustrating. Totally understand why consumers get irritated about this. But just I wanted to try to educate everybody on the community property state. What is yours is his, and what is his is yours. And it's one big happy family. It's a community property state. And it does affect your VA and FHA financing. Most of the times it only really comes into play with FHA financing. So with that said, any questions, concerns about it, please give me a holler, 602-757-2171. It is Friday Coffee with your mortgage man, Eric. The Bahamas, wish I was there now. Make it a productive weekend. We'll see you.